You know how it is. Every single day, you've got the market just screaming at you. Headlines are flashing, tickers are turning red, and that panic, it starts to creep in. But what if most of that is just noise? Okay, let's dive into this and figure out how to find the real signal, the one that the pros are actually listening for. So picture this. You see that headline, market sliding. What's your first instinct? For a lot of people, it's to worry, right? Maybe even hit that sell button. But is that the right move? Or are you just reacting to something that, in the grand scheme of things, doesn't really matter? That's the big question we're going to tackle right now. All right, so let's start with the source of all that anxiety, the news itself. This is the kind of thing you'd see on any given day, and it's always presented like it's a huge deal.
So the headlines are screaming slide, right? But let's look at what that actually means. We're talking the S&P 500 down a tiny 0.2%, the Dow down 0.4%, the Nasdaq 0.3%. I mean, on the surface, these are really, really minor moves for the major indices. But, of course, the story never ends there, does it?
And this is where it gets really interesting. The news doesn't focus on those tiny index shifts. Nope. They focus on the drama with individual stocks. So you've got Tesla dipping almost 3%, but then you look over at ServiceNow and IBM. Wow, down a massive 15 and 11%. This is the stuff that gets the heart racing and really fuels the panic.
And of course, there's always a story, a narrative to go along with it. For IBM, the story was, oh, their growth is slowing and everyone's worried about AI disruption. This is the why the headlines give you, right? It makes the drop feel totally real, completely justified, and yeah, pretty scary. But is that really the whole picture?
So should you be scared? Is that fear actually justified? Well, let's switch gears completely here. Because when you go from those polished news reports to the, let's say, raw commentary from traders on Reddit, the story, wow, it changes in a big way.
What's the first reaction? Just complete dismissal. This person sees the article, figures it's probably written by an AI anyway, and just calls it out. Pointless. You can see there is absolutely zero panic here.
And then there's this classic. It perfectly captures how the community sees this kind of volatility. It's that old South Park meme. You know the one? It's basically saying that these tiny dips and the money you supposedly lost are so insignificant they just, poof, vanish in an instant.
Oh man, you can just feel the sarcasm dripping off this one. They're totally mocking the super dramatic language of the headline by putting it right next to a ridiculously tiny percentage drop. Then they call it AI slop, just dismissing it as totally meaningless, computer-generated junk.
So here's the bottom line. The consensus from these traders is crystal clear. These breathless, the sky's falling, daily reports, it's all just noise. It's a distraction, especially when a lot of them feel like the market has been basically flat for a while now. Okay, so that brings us to the most important question of all, right? If we're supposed to just ignore all these daily headlines, then what should we be paying attention to? How do you actually find that real actionable signal in this ocean of noise?
Well, according to the experienced folks in the community, the answer is simple: strategy. It's not about reacting. It's about having a disciplined, analytical approach to what the market is actually doing.
And the main tool in the toolbox for that? It's technical analysis. Now, this has nothing to do with news or your gut feelings. It's all about using charts and data. We're talking price action, classic patterns, and those famous indicators like RSI, EMA, and MACD. Basically, they're just tools to help you measure momentum and spot trends so you can build a logical, repeatable strategy for when you get in and when you get out.
And a good strategy is built on solid principles. For example, one trader suggests using a mix of different indicators to get a fuller picture. Another one really hammers home the importance of making sure your short-term trades are going in the same direction as the bigger daily trend. It just gives you a better shot at success. And this one is huge. Focus on just a few setups that you know inside and out, instead of trying to chase every shiny new thing. So, what does one of these setups actually look like in practice? Well, the community shared a couple of really popular short-term plays that are all about principles, not panic.
Okay, here's a fantastic example. It's called the Opening Range Breakout, or ORB. It's a really simple four-step process. First, you just mark the high and the low of the first 5 minutes of trading. Step 2, you switch to a 1-minute chart. Then, and this is the important part, you patiently wait for the price to make a strong move, a breakout, past that range. And the real key? You wait for it to come back and retest that level to confirm the move before you jump in. See, it's pure mechanics, zero emotion involved.
And that's not the only one. Other traders like to scan for stocks that have crazy high volume before the market even opens. That's a good way to find potential breakout stocks. Then there's a more advanced play that has to do with something called convertible notes. Think of them like bonds that can turn into stock. The way big institutions manage the risk on these can create predictable selling pressure, which, if you know what you're looking for, you can use to your advantage. Again, notice a pattern here? These are all signals based on how the market works, not what the news is saying.
But here's the real kicker. You can have the absolute best strategy on the planet, but if you don't have the right mindset, it's pretty much useless. This is the foundation that everything else has to be built on. So, what's the #1 rule? The one that every single successful trader lives and breathes by. It's incredibly simple. Survive first, profit later. Before you even dream about making money, your absolute #1 job is to protect what you have. It's all about managing risk so you can stay in the game. You gotta be around tomorrow to trade again. The profits, they come after you've mastered the art of not blowing up.
And this quote just nails the core of that survival mindset. Trading isn't about constant action, about always being in a trade. A lot of the time, the most profitable thing you can do is nothing. Just sit on your hands and wait. Having the discipline to wait for your setup, the one you know works when the market is all over the place, that is the master skill.
So really, it all boils down to this: a tale of two traders. The ineffective trader, they're chasing a quick buck, reacting emotionally to every single news alert. But the effective trader, they're focused on managing their risk. They keep a trading journal to learn from their wins and their losses. And they patiently wait for those perfect A+ conditions. In other words, they listen for the signal and they tune out the noise.
So if there's one thing to take away from all this, it's this. Ignore the daily noise, focus on solid, repeatable strategies, and build a disciplined mindset that's all about survival first. And that really just leaves us with one final question for you. Think about your own approach. When the market makes a move, what are you really reacting to? Is it the noise from the headlines that's calling the shots? Or have you built a trading plan based on solid principles?